Good morning, everyone. As people join us from Japan and Australia, let me begin, first of all, by acknowledging the traditional owners of the many lands upon which we're meeting today. Here in Canberra, it's the Ngunnawal and Ngambri peoples, and on your behalf, I pay my respects to their elders past, present, and emerging. Welcome to everyone who's online today. I'm Veronica Taylor from the Australian National University and also from the AJBCC board. We're really delighted to bring you a discussion today of the newly released HSF Japan Australia Investment Report for 2021. This report has really become an authoritative analysis of a key part of our bilateral business relationship. So we'll hear first today from the authors of the report, and then we'll invite comments from two experts in Tokyo before opening the floor to Q&A. For this meeting, we're using the Q&A feature on Zoom, which you'll find at the bottom of your screen. So feel free to pose questions or make comments through that Q&A button throughout the discussion. And when we come to open the floor, we will try to move through as many questions and comments as we can. It's now my pleasure to introduce the lead author of the report, Ian Williams, who is a senior advisor at Herbert Smith Freehills. Ian is well known to this audience as one of Australia's most senior figures in Australia-Japan commercial relations. He's also a vice president of the AJBCC. Speaking with Ian today is his partner, Damien Roberts from Herbert Smith Freehills. Damien is now based in Sydney after a decade of experience in Tokyo, including serving on the Council of the Australia-New Zealand Chamber of Commerce. Damien is also well known to this audience as a leading expert in Japan-related business transactions. So to present a summary of the report and to highlight some of the key findings from 2021, we'll now turn to Ian and Damien. Thank you both.
Thanks, Veronica, and very much for your kind words too. Also, I'd like to express appreciation to the AJBCC for hosting this session, and of course also wanted to acknowledge that it's a difficult time for many businesses as they try to understand the impact of the terrible circumstances unfolding in Ukraine. Today's session is a focus on what's now our 5th edition for an annual in-depth review of the investment trends from Japan into Australia. And as the title suggests, 2021 was ultimately seen as a year of partnerships, a theme that we'll flesh out in today's discussion. In a moment, I'll hand over to Ian Williams, who is, as Veronica says, the main author and the driver behind the report each year, to talk about, I guess, the partnerships and some other trends we saw in 2021 in some more detail, and perhaps even offer some predictions for the years ahead. Ian, I recently heard describe the report as a labour of love, and reflecting, I think it certainly is both of those things. For Ian, for myself, for all the members of our Australia-Japan team across our Australian offices and up in our Tokyo office, supporting the bilateral relationship across all facets of investment and collaboration, something we're passionate about. But as I said, it's also a labour, and it's not just our labour. The labour seems to start shortly after the previous year's report has been published. But it's also many Japanese clients and I guess other advisors who are active across the Australia-Japan corridor, who've given up their valuable time to speak with us. They're acknowledged in the report, which is all the more rich for their input, and we're certainly very grateful for it. The main themes that we saw across the year focused on new energy and as we said, partnerships, which we decided were distinct, but I guess also interrelated themes. And from a bilateral perspective, was also very pleasing to see the diversity of investment continuing, which was something we had sort of foreshadowed in our earlier report. Notwithstanding sort of the ongoing impact of the pandemic, which of course led to some slightly lower deal values and deal volumes. So on that note, please allow me to hand the virtual mic across to Ian to take us through some of the highlights of what we've seen.
All right, I'll just start my stopwatch. Thanks very much, Damien, and welcome everyone. I'm going to speak for about 15 minutes, but rather than use PowerPoint, which is I find a bit distracting, I thought I'd just sort of try and have a kind of conversation with you. So look, to set the scene, Australia had a record boom in mergers and acquisitions. It was 5 times greater deal value than 2020. But this really wasn't reflected in the Japan-Australia transactions. So the headline of our report 2 years ago was more deals, more dollars, more sector diversity. And you can see a kind of a nice increase year after year. And then last year we had COVID, and the number of deals is certainly down. This year the number of deals was, in 2021, the number of deals was 33, 27 acquisitions, 6 divestments. But in those deals, there was only 2 really of note. Daiichi Tao acquiring the Westpac life insurance business for 900 million, and sort of towards the last bit of this, the unfortunate story of Japan Post and their investment in Toll, and they're selling their Global Express business for 7.8 million, but incurring a $624 million write-down in that. So the number of deals was down, and the other thing about that was there was very limited new entrants. So in the period 2017 to 2019, about half the investments were made by newcomers to Australia. And we're thinking that once travel restrictions and quarantine, etc., and we start to live with Corona a bit more effectively, that they will return. And they've almost been entirely absent. And a bit of that is the older, more traditional companies, I shouldn't say older, more traditional companies have rules requiring physical due diligence and face-to-face meetings with local management. So as much as we've adjusted to the Zoom and Teams and Blue Jeans, etc. environment, there's a sort of a confidence about seeing is believing. So the key drivers still remain, and there's no sort of change in that. You've got the demographics in Japan, plenty of cash on Japanese company balance sheets, and Australia has stable government, population growth, which will both natural and net positive immigration. Those immigrants tend to be younger, more educated, and looking to buy services, which makes it attractive if you're going to participate in the domestic market. Generally, the economic strength, the recovery from COVID has been good, and rule of law, etc. I guess what's really changed in the last 12 months is the diplomatic overlay, both at the multilateral and the bilateral levels, which sort of then complements the fact that Japan is our second largest foreign direct investor, our third largest trading partner on a two-way basis, and our second largest sort of export market. So we don't see any change, probably a significant enhancement. Now, what we've identified is this new investment paradigm. So starting in the 1960s, we've had the traditional joint venture model with de-risking projects and allowing finance by having secure offtake, so that, with minerals, energy and food. And then starting about 15 years ago with Kirin purchasing the National Foods Group for about $3 billion, where they are purchasing just completely domestic Australian businesses to participate in that market. And that's continued in parallel. But we see this new energy partnership as quite a new model for investment, which will continue to strengthen. In this last 12 months, we've seen 25 new partnerships, and in total now there are over 40 new energy related partnerships. And when I say new energy, hydrogen, ammonia, methanol. This is very important for Australia because it currently we supply about 1/3 of Japan's energy needs through thermal coal and LNG, and we're very lucky. We're greatly endowed with those minerals and energy. But the technology around hydrogen, it's a good starting point to have the base fuels for those. The hydrogen, if Australia is going to continue to remain as the major energy supplier into Japan, these 40, and it's probably, by the middle of this year, it'll be 50 energy related, and this is collaborations, joint studies, MOUs. Many of them are very, very early stage, and there is no kind of proven technology at this point, as I understand it, for large scale hydrogen production and transportation. So what we're seeing is a unique model of government playing a lead role in this. Government agencies, both Japanese, Australia, state governments. You're seeing JBIG, NEDO, the Green Energy Fund out of Japan, and connecting with Australian credit agencies, your technology companies, energy companies, power utilities, port providers, shipping companies. Of course, the Japanese trading houses, they're looking to add value at some point in the chain. So you've never seen such a collection of different government entities or government and private enterprise all coming together to see if they can create this new model for new energy. So even though a lot of this is just seed capital to start with, it's the basis for significant new investment in Australia over the next 5 to 10 years as this sort of commercialization takes place. And what we have to remember in Australia is that it's a global competition to be the leading hydrogen. Sure, there'll be a portfolio. You don't want all your hydrogen coming from, and we've got shipping concerns, geopolitical issues, but Australia needs to really focus on this, or we will be one of the energy suppliers to Japan, not our the leading supplier as we are today. Look, I wanted to talk about some of the other, like the investment is definitely driven with a kind of decarbonisation ESG filter. So almost every Japanese company now is looking at that as the kind of threshold decision. If it doesn't pass that test, it's very difficult for it to kind of progress. That's for new investments. If there's expansions of existing investments, particularly LNG or oil and gas, they're seen in Japan as sort of transition fuels that are important in this sort of net zero 2050, although 2050 is becoming even sooner than that. So you'll see that particularly some of the trading houses are still participating in those, but the exit in thermal coal has continued, and I at the same time, coking coal, there's still small amounts of continued investment in that. But I guess the other area that's of real interest from government to government collaboration is the Japanese government and the Australian government working behind the scenes closely on critical minerals, which is all sort of part of this new energy. So I call it critical minerals and battery raw materials. And Australia having endowed with a significant number of these important minerals, and it's not only just the minerals, but what Australia may do with developing that and actually processing them so that we've tended to be an exporter of bulk commodities. And although some of the Rio Tintos and the BHPs in the past have tried to add value, we haven't been as successful, and the economics of it's easier to do that offshore. But when you overlay the kind of geopolitical implications, it's going to be important that a lot of that is done actually onshore. So you saw the Australian government put together a $2 billion fund available to finance critical minerals projects, which the share market or equity markets may not have been as willing to support. and a number of the the lithium projects and cobalt, which is in short supply globally, are now moving along quite quickly. But there's a competition there as well. The Korean companies are diversifying into EV and being major powers in this renewable battery area, and they're aggressively finding joint venture partners in Australia. Might move on to some of the things that were kind of new and digital transformation, or DX is a word used virtually in every strategy paper, every article in the Nikkei. So we talked this year a little bit about DX and innovation, and also the development of the venture capital in Australia. So it was a series of, whether it's EDOM announcing Melbourne as a new platform, but a series of sort of new Australian-based, but looking to go kind of global. And the success of the Canvas and Atlassians and WiseTech as global companies has meant now Australia is at least on the radar. We're never going to be Silicon Valley, but at least we're in the top 10 within Japanese companies looking at where they could find innovative technology. We mentioned the new concept of Dejima, where large companies realize that within their kind of structures, it's very difficult to be innovative, and they're kind of spinning that out and looking to partner with startups to kind of change the DNA and accelerate this technology and innovation. The commercial property and real estate markets, particularly in residential, 4 of the 5 large Japanese house builders are here, and the product suppliers are joining them. Commercial property is very attractive in Australia, and the Financial Review has sort of picked up a couple of those trends, but I think probably it's going to be limited by there's not enough development projects for the amount of money that's looking to find a home in Australia. Look, the iron ore and base metals, those joint ventures have been going since the 60s, and it doesn't sort of show up in the newspaper or in the investment reports, but every time there's an iron ore expansion or other coking coal mine, there's new money coming in from Japan, and particularly the steel companies and leading Japanese trading houses have been in those for a long, long time. And some of the record profits made this year by Marubeni and Itochu and Mitsui in particular, a result of those record prices. Japanese interest in economic and social infrastructure continues. There's a bit of a move away from the PPP model towards a sort of more alliance model, which probably doesn't suit the Japanese participants as much. But it's exciting to see Sojitsu's success with the Footscray Hospital, taking a 30% interest there, and you've got Marubeni and Itochu and Mitsubishi all continuing with their participation in major, whether it's water, in rail in the case of Marubeni and Itochu, and in rolling stock in Queensland. The financial services is again, the story of what was Tower Life became TAL, and then taken over by Daiichi Seimei in, I guess, in the late 2008-9. At that stage, it was the 4th largest life insurer. It's now the leading life insurance company in Australia. It has 27% market share. It's moving to 33 after the Westpac life insurance business as the completion takes place, and that's integrated. But you're seeing sort of continued interest, and the Japanese insurance companies still see Australia as an attractive market because of those demographics. The one last area before I stop was the role that the Japanese banks have played, and obviously the 3 mega banks are major project financiers of particularly renewables, but also corporate, becoming more and more corporate Australia. Northern Chukin established itself here 5 years ago. It's becoming more and more active, both in the primary and the secondary debt markets. And we saw on the 16th of March, Japan Bank for International Cooperation reopen their Sydney office after a period of 7 or 8 years sort of running Australia out of. And that's a direct reflection of the Japanese government wanting to get much, much closer to Australia, in the economic relationship then drives the diplomatic and the political relationship. So it's a sort of a virtual circle. There's a few other trends we saw, but if you have a chance to read our report, we've got it both in English and Japanese. I'll stop it there and look forward to fielding a few questions.
Many thanks, Ian. You mentioned at the outset of your remarks that government agencies and government have played a key role in forging and sustaining these partnerships. And so we're very pleased now to hear from Mr. Kazushige Nobutani, the president of JETRO, based in Tokyo. Nobutani-san has been a long time highly informed and engaged observer of the Australia-Japan business relationship. And so Nobutani-san, I'd like to turn to you now and ask for your comments on both the trends that Ian has identified in the report and also how JETRO thought about the Australia-Japan investment flows in 2021.
Well, thank you very much for inviting me here. My name is Kazushige Nobutani, the president of JETRO. Well, as Ian mentioned, Australia has been and will be one of the most attractive and important economy for investment from Japan. Investment from Japan to Australia in 2020, even under difficult situation due to COVID-19, was the largest in the last 10 years. So Japan became the second largest foreign investor to Australia as a stock base, only after the United States, then now followed by United Kingdom. In 2021, unfavorable situation continued, but large-scale M&A by major Japanese firms were also continuing in various areas such as IT, food, housing, finance, etc. I think this is structural trend. So I would like to explain solid ground of this trend. First of all, we share fundamental values. Both of us firmly committed to democracy, rule of law, fair competition, open economy, and above all, pacifism. When I look at Russian invasion to Ukraine, I reaffirm that our common value and mutual trust are primary source for secure guarantee of investment. Second, two countries are cornerstones to support free trade and investment in the Pacific region. We have good record of cooperation to design, maintain, and update rules in various areas. Third, both nationals are like-minded and respect each other. Enjoying ski in Hokkaido, studying English in Sydney, playing rugby together, it means healthy and wealthy way of life for all of us. Fourth, we have been energy partner now and in the future. Energy market in recent days in rough riding, but energy tie between two countries is stable and reliable at all. In addition, the world's first endeavor of a cargo ship of liquefied hydrogen from Hastings to Kobe has successfully concluded last month. I just came back from India, where they promised to be hydrogen exporter in the near future. But I believe Japan and Australia are moving a step ahead of that country. So we will lead a change to carbon neutral future in the Pacific region. Fifth, Australia is a growing economy. you have been growing for nearly 3 decades. Even if you look at year 2100, your population is expected to grow. So not only in traditional mining and energy sector, but also in food, housing, and startups, Australia is enchanting economy for us. Lastly, but not limited, Australia is tolerant for Japanese investors to buy your largest or second largest companies in certain sectors. I assume you trust us that we will not swallow universe. Finally, business trip between two countries came to be quarantine-free in recent several weeks. So online meeting is fine, but offline meeting is better. So JETRO is ready to connect you by all means. Thank you.
Many thanks, Nobutani-san. We really do look forward to those opportunities to meet in person very soon. We're fortunate to have with us today as a commentator Elizabeth Cox. Elizabeth is the General Manager for Northeast Asia with Austrade, based in Tokyo. She was previously Head of Government Relations for Asia and Head of Corporate Affairs for Japan for the Macquarie Group. Elizabeth, you're on the ground in Tokyo, and so we're really interested to hear your perspective, both on the report and the headlines that Ian has presented, and also on Nobutani-san's remarks. Thank you.
Great, thank you, Veronica, and thank you, Ian, Damien, and Nobutani-san for your remarks as well. So I'd just like to touch briefly on two areas, how the bilateral relationship is going and how we here at Austrade Japan are seeing investment trends. Firstly, as the previous speakers have mentioned, particularly Nobutani-san, these bilateral ties are strong and they provide the context for our investment story. And we feel that in the last few months, particularly, there's been an even closer and deeper aligning of those bilateral relationships, really evidenced by the meeting, I was about to say visit, the virtual visit between PM Kishida and our Prime Minister Scott Morrison back in January. Unfortunately, it was meant to be a face-to-face meeting. COVID unfortunately didn't allow for that, but it did actually have some meaty outcomes. One of which was the conclusion of an agreement which had been under negotiation for 8 years to elevate practical aspects of the relationship in security and defence. This now clearly positions Australia as Japan's second largest defence partner after the US and may result in commercial opportunities down the line as well. The two PMs had a really good and frank discussion on hydrogen cooperation, including the announcement of a new clean hydrogen trade program with funding of 150 million Australian dollars to support the development of clean hydrogen supply chains in Japan, and previous speakers have mentioned, of course, the Green Innovation Fund and other Japanese government support for the industry. So it really is being developed in lockstep between the two governments. The other announcement of note was the formal announcement of our involvement in the 2025 Osaka Expo, which again is a major commitment to showcase Australian capability, not just in decarbonisation and energy, but also in areas like life sciences and education and others. So I'm sure you're all finding this as well, but I've been in and around the Japan relationship for 25 years now, and I don't remember a time where the level of confidence engagement in the business relationship has been this strong. Previous speakers have alluded to the borders. It's worth noting that back in December, when Australia opened its borders, trialled the reopening, it opened them to 3 countries, one of which was Japan. And there's no real irritants in the bilateral relationship. It is, as Nobutani-san said, a relationship of trust. The first HESC shipment, which has been mentioned already, but really should be highlighted as a real watershed moment in the hydrogen business relationship between the two countries. We had a ceremony in the Port of Hastings in Victoria, which was attended by 2 federal ministers, a Victorian state government minister, Dr. Finkel, and I think every senior corporate from Japan sent an emissary or was there in person if COVID allowed, as well as from the Australian side too. And we look forward to, of course, welcoming the vessel back to Japan in due course. Our ministers continue their engagement. Nobutani-san mentioned his trip to India. So last week, our Trade Minister, Minister Tian, METI Minister Hagiuda, and their counterpart, Mr. Goyal in India, discussed trilateral supply chain initiatives and agreed to continue to share best practice on supply chain resilience and hold investment promotion events together. And these supply chain resilience discussions have become more important than ever in recent times. So my second point on investment trends, very well outlined already by Ian and Nobutani-san, of course, but the investment story does remain strong despite the challenges from COVID. Of course, the open borders are going to, we hope, we believe, sort of precipitate higher foot traffic, and we're already seeing that and hearing anecdotally that the number of C-suite visitors to Australia from Japan has increased remarkably in the last few weeks, not just due to Australia's open borders, to the WA border opening on the 3rd of March, but also the fact that, as has been alluded to, if you've had 3 vaccinations, you can now enter Japan quarantine-free if you're a visa holder or a returnee. And as someone myself who spent 12 weeks in quarantine last year, being able to walk out of Haneda Airport almost immediately on Saturday morning, just this last Saturday, was a blessing. And I think it really will speed up some of those decisions for senior executives to be able to go and kick the tires on potential investments or just review their own portfolios. So the key trend we're seeing on the investment side is this diversification story, which Ian spoke about, as well as the partnership element. With a very strong focus on projects that are going to get Japan to its 2030 and 2050 net emission reduction targets. These are very ambitious targets, as we all know, and the message I'm getting from corporate Japan is 2030 is feeling a lot closer than it did even a couple of months ago. It was almost like the clock ticked over to 2022 and people realized that was 7-point-something years away from 2030. So we're seeing a lot of activity on that front at the moment to realize those ambitions. With, of course, hydrogen being the word of the day. So here in Austrade, Japan, we've supported or are currently supporting over 20 different hydrogen and ammonia projects all over Australia. These are at different levels of development, of course. Some are still quite early stage, but they cover every state and territory except at this point the ACT, and all technology and delivery methods. We're seeing movement as well on carbon capture and storage, and in the circular economy as well. This is a trend we've really seen come through. I was going to name a number of transactions, landmark transactions, but these are all in fact contained in the report. So I invite you all to have a look just to see the breadth and depth, not just of the diversity of technology, but also diversity of location of these green energy investments. At Austrade Japan, despite closed borders in the last year, we've been holding a number of seminars on clean energy topics, and we've seen the number of Japanese corporates who join those seminars increasing as time goes on. One example, tomorrow on the 23rd of March, we have partnering with the CSIRO to brief Japanese investors on carbon capture and utilisation technologies and opportunities in Australia. And for that one, we actually have a record 150 Japanese corporate representatives attending for what is still kind of a niche topic. It's quite an incredible demonstration of the interest in this area. We're seeing increased interest in methanation and parts of the critical minerals value chain, which Ian mentioned. Ian kindly mentioned the critical minerals funding available, but Austrade itself has published annual critical minerals prospectuses for the last 3 years, most recently in December, which outlines 40 projects that are open for investment, and we hold virtual seminars regularly. Finally, on Ukraine, Nobutani-san's covered this well, but I just wanted to note once again that Australia stands with the people of Ukraine and continues to provide various assistance. The economic implications for Australia are likely to revolve around helping Japan with its energy security challenge. As we all know well on this call, Japan imports 88% of its energy needs as at 2019. But the good story here is that only 4% of Japan's oil and 9% of its LNG is imported from Russia, compared to Australia providing 36% of LNG. But the indirect economic impact on all players in this region, but on Japan included, is likely to be larger through commodity price volatility and supply interruptions. And having just been in Australia, I've seen the impact of petrol prices already. So I'm just going to leave it there because I'm conscious of time, but I just want to commend Ian and the whole HSF team for a fantastic report. It's not known as the investment Bible in our circles for no reason. It's just a fantastic snapshot of what's going on around the traps. And I look forward to the Q&A ahead. Thanks very much.
Thanks so much, Elizabeth. That was really informative. We have questions coming through on the Q&A channel. If you'd like to pose a question or make a comment to the authors or our panelists, please start loading those up now so that we're able to get through as many interactive questions as we can. We'll turn to our first question, which is for you, Ian, and it's from Peter Cleary. And Peter says, first of all, thank you for the excellent report. Hydrogen to Japan is clearly the opportunity of the moment, but are there signs that some Japanese industries are moving manufacturing to Australia to be proximate to critical minerals and renewable power?
Thanks, Peter. Yeah, look, the Japanese government is certainly looking to collaborate with state governments to establish strong supply chains in critical minerals for better vertical integration. And the ones that we became aware of through our investigations are lithium refining, manufacturing of vanadium batteries, graphite anodes, and refining some of the rare earth minerals. Again, equity markets or the share market may not support those. So it's an example where similarly in the way Japanese entities like JOGMEG and NEDO and others, by providing either grants or some concessional funding or co-investing or providing low interest loans, can actually get those projects to commercialization. But it's a good question because Australia doesn't have a very strong history of successful mineral processing. And in fact, we've offshored that. But again, this is this sort of overlap of the economics and the diplomacy kind of intersecting. And it's in our mutual joint interests, to secure a stable supply of those critical minerals.
Thank you, Ian. We'll go next to a question from Richard Andrews, and it's a question for Ian, but I'm also keen to hear from Elizabeth and other panelists, and it's about human capital. So one of the things that the report highlights is that as investment trends diversify, the business relationship will become more people intensive, and that requires cross-cultural and linguistic skills on both sides. So the question is, how well are we positioned to ensure that we're able to grasp the opportunities that arise in this new phase of partnerships? And are there things that you'd like to see business and government do to ensure that we have the necessary human capital to take advantage of the opportunities that the report outlines?
Well, I think Australia's doing poorly. I think the last Prime Minister who had a sort of a focus on the importance of developing a cohort of bilingual, bicultural university graduates, so people with technical expertise, was probably Prime Minister Rudd. And we haven't really had that discussion. But also businesses at fault. And there isn't a natural pathway. The universities did have a lot of courses, but there weren't opportunities for cadetships, for summer clerkships, whether working for Australian companies involved with Japan or Japanese companies on the ground here. It was great to study the tales of Genji, but it didn't lead, the market said it didn't lead to employment opportunities in enough quantities and a fair remuneration for the difficulty in gaining those skills. So it's going to take, it's going to need to be driven by the government, but embracing the universities.
Thanks for that. I might ask Elizabeth from the Tokyo side the same question. How do you perceive things from where you are, trying to move the ball forward with the talent that's in the bilateral space at the moment?
Yeah, thanks. And thanks, Ian, for those comments as well. I think there's some really good initiatives that we should shine a spotlight on. One great example is within the AJBCC, the Future Leaders Program, which actually does create this very strong network of more junior executives between both countries, and they can share ideas and actually bring forward solutions for tomorrow's problems, which I think is a really great forum. The New Colombo Plan, of course, we're hoping to see some New Colombo graduates here in Japan this year. Obviously, COVID has made that very difficult the last 2 years. So those programs being able to flourish in a face-to-face format, I think will bring benefit too. And since we have Nobutani on the line, I just wanted to mention the JET program particularly. My younger sister was a JET. I personally didn't do it. I went the ANU Ryugakusei foreign student route, but it is just a fantastic program that embeds young people in communities and it allows this cultural exchange at a people-to-people level. So I think these are some great ways to grow the Japan literacy between the two countries. As Ian said, it's not necessarily about sitting around learning the tale of the Genji or reciting haiku about the cherry blossoms, although I'll be doing that this week. It is about those people-to-people links getting stronger from a business perspective, as well as language training, of course. It is still a country where you do need, I believe, some Japanese literacy to really succeed. So where we can, just fostering those programs too.
Thanks so much. The next question I'm going to put to Ian and Damien and also Nobutani-san, and it's a question from Jenny Corbett. Jenny asks, are there developments in Australia-Japan partnering in investments in third countries? Trilateral collaborations with India at government level have been mentioned, but what about private sector activity, particularly in Southeast Asia? Is this an area where we can develop new types of cooperation with Japan? We might go first to Ian and Damien and then invite Nobutani-san's response.
Okay, I was hoping Damien would go before me. Look, the AJBCC had two initiatives going back. I think Bob Seidler's actually on the call today. Bob led those to India and to Indonesia to actually try and explore. And I suspect in that old thing, is it a good idea or is it more important to have a good idea or good timing? I think it was probably a good idea and the timing may have been too early. And unfortunately, Bob, I don't think he's probably the best one to respond on this, but there doesn't seem to be too much evidence of, commercial opportunities in third countries. The sort of toll acquisition of, the Japan Post acquisition of Toll had a little bit of that story in January 2015. Just, buying a business in Australia we've had the Nippon Steel, BlueScope joint venture, which has a number of manufacturing facilities in Southeast Asia. So there are some examples, but I don't think it's enough sort of critical mass to say it's like a key driver. And look, I tend to think business finds opportunities, they act rationally. They must find that those are actually competitive, or the Australian companies, whilst in the domestic market, have a competitive advantage. Their relationships with other proponents and state governments and federal government, the same doesn't apply because they're not well-established networks in Southeast Asia.
Thanks, Ian. You literally, thank you, stole my words there too. I would have echoed the work the AJBCC had done. I think there's a broad recognition that Southeast Asia is important in the trilateral relationship. I mean, a lot of manufacturing that gets done up there. We've seen a trend towards, made in Japan, and how that then sort of ultimately leads into technology and support in sort of the third or fourth wave that Japan can bring to Australia, but actually then leveraging that to make it, whether it's a trilateral or quadrilateral, whatever the appropriate word is, to investment and a joint partnership across the Golden Triangle or more broadly is probably still a work in progress, that one, I think. But having said that, I think certainly the use and the ability to leverage some of that technology and some of that manufacturing experience, certainly the high-end things that we've talked about as opportunities for Australia, will hopefully play out in sort of the next 5 to 10 years, particularly whether it's around hydrogen or certainly much further beyond that. I'm hopeful that that will actually come to fruition. As you say, the timing, maybe it was a little bit early, but I certainly think the idea is great, and look forward to what that leads to in the years to come.
Thanks, Damien. Nobutani-san, you just returned from India yesterday. What's your perspective on this question of utilising partnerships with third countries?
Well, I would like to echo to Ian and Damien, and that there is huge potential for both of us to work together in third countries, including India and Southeast Asia. But potential is just exploring. We need to work harder, and the JETRO and the Austrade are ready to work together. Japanese major companies, as Ian said, are eagerly look for investment opportunity in East Asia, especially in digital transformation and green transformation. I mean, DX and GX, and they put several amount of money to these regions. So it might be a good idea to talk with them to find a concrete opportunity to invest. This is my comment.
Many thanks. We'll turn now to a question from Bob Seidler, who was mentioned a moment ago, and it's a question for Ian and Damien. First of all, great job on the report. And then the question is, you mentioned that Japanese partners are finding PPPs difficult. Can you elaborate on that observation?
Yeah, look, what we've, the feedback was, I guess the trading houses have been the most active. And as state governments with low interest rates have some of the new PPP, so the new procurements, rather than using a PP model, have moved to an alliance model, which is probably more suited to the Japanese Zenicons. So you might see, for example, an Obayashi who's got a sort of presence and less of the trading houses. The other is the Japanese were bringing kind of innovative financing to those PPP consortia, but the Japanese mega banks now are actively lending to non-Japanese consortia. So they're going to have, they're looking for a new value add. How do we bring that? On the same side, the social infrastructure seems to be still using the PPE model, and we talked about Sojitsu's success with Essendon Hospital. Which is a new project, but we saw Marubeni's MM Capital, but Marubeni managed fund take 9.9% of the new Adelaide Hospital, but that was actually a secondary acquisition once it had been built. So sorry, Bob, I kind of broad brushed it there. So there is lots of opportunity, but maybe in a different group of investors.
Thanks so much, Ian. I want to pose a question to you and everyone on the panel, and it's really about the asymmetry in the partnerships that we're seeing. So if we step back from the report, we might say that Australia is now successful at creating attractive investment and acquisition opportunities, particularly when the ESG filter is applied. There's clearly high trust on both sides, and Australia is actively welcoming Japanese investment in a whole range of sectors. And as you point out, Ian, Australia is now at least on the radar for its technology and innovation capability as well. But we don't see that reflected in Australian investment in the Japanese market, or indeed Australian business presence in the Japanese market. And this is an observation we make often. But picking up Nobutani-san's comment about working harder, how are we going to work harder to address that asymmetry? There's a paradox about being able to grow really successful, attractive businesses at home, but apparently not being able to carry that abroad or carry it to Japan without a strategic partner in Japan. Thoughts and comments?
I'm happy to say a couple of introductory words. There are some good examples of successful Australian business. Goodman Group has been incredibly successful, bringing an Australian model of distribution centres, and Lend-Lease has been very successful. But in a sense, that the reason Australia is attractive because of the demographics, the population decreasing, the population ageing, makes it less attractive, I guess, for Australian companies. And also the Japanese market is kind of the competitors are well entrenched. They've gone through their own consolidation, where there were 4 and now there are 3, and sometimes through the mergers there's only 2 companies left who are enjoying appropriate sort of levels of profitability and then using that. So there's sort of, I guess, the demographics are against an Australian company. And the other thing is you've got to focus on what's Australia really good at. There's probably asset management. So you're seeing the success of the Macquarie's, any number of the asset managers has a portfolio of Japanese capital. It's kind of just hidden from us a little bit. Infrastructure Macquarie has been successful in Japan. But you're right, it's there's and a reflection. Major decisions in new markets are made by boards of directors. How many major Australian companies have boards that have a critical mass of directors who have some understanding of how to do business in Japan or with Japan?
Thanks so much. I see that Nobutani-san wants to come into the conversation. Nobutani-san, dozo.
Well, thank you. It is an important question for us too, how to invite foreign investors to Japan. Traditionally, Japan had been unpopular destination for international investors so far. But recent years, we decided to invite foreign investors by all means, and stock basis investment from outside increased by sixfold within several years. And the Japanese government has set more ambitious target within coming years. It is not my favorite things, but Japanese yen is getting cheaper at this moment. So it might be a good opportunity for you to consider to find business partner in Japan.
That's a great observation. Thank you very much, Nobutani-san. That segues well into our next question, which is from Consul General Kia. And he asks, what would be the most effective measures by Japanese and Australian governments to further facilitate the formation of Japan-Australia business partnerships of the kind that this new report highlights? So what should governments be doing to facilitate and strengthen the partnerships? We might go to you first, Nobutani-san, and then to our other panelists. We'll go to Elizabeth next, and then to Ian and Damien.
Well, the important thing is create trust. That is not very straightforward for investors' money, but creating trust is the most important thing, I think, to make investors to think about the future. So this is government role. Also, government needs to focus on removing barriers, tariffs and non-tariff barriers for investors. And I think both governments had worked well in this area.
Thank you so much. Just while we have you, Nobutani-san, I should pick up a comment that came through a little earlier, which was a question about the travel and quarantine regulations in Japan and in Australia. The comment was that face-to-face meetings are key to growing those partnerships and investments. Can you give us an update on Japan's position on business travel?
Well, thank you for mentioning that. Let me read a paper in front of this. As of March 1st, Japanese government have decided that if you have booster shot and you have your paper of proof of booster shot with yourself, and if you have negative result of PCR test at the airport, you don't have to be quarantined. And also, you are permitted to use public transportation after you enter into Japan. So this is announcement for Australian traveler to Japan. This is our update situation.
Thank you very much. That's great news. We'll turn now to Elizabeth and ask on the Australian side, what should government be doing?
Well, thank you. Nobutani-san's provided me a nice segue, because I actually wanted to say that one of the things we can and will be doing is seeing the return of the business mission. On the earlier question about Australian business interest in Japan, I really did see an uptick in my previous role around the end of 2019. And I think we can all remember what happened at the end of 2019 in Japan. It was the Rugby World Cup. So we actually had boards, we had senior people visiting. And unfortunately, I think that would have been the case in 2020 as well. Had the situation been different, we would have seen a focus from senior business people on Japan, given the Olympics and the possibility of traveling to Japan and engaging on a business level as well. So I feel like there's a lot of pent up demand, and Nobutani-san has mentioned the quarantine-free access. That is going to remove a huge roadblock to, I think, that closer people-to-people link, because we are, as the report says, this is the year of the partnership. The companies are partnering like they haven't before, and so they'll be coming together on areas of mutual interest. I did mention in my remarks before the 2 p.m. signing the low emissions agreement back in January. And I think those kind of agreements, the two governments actually agreeing on priority areas and working together, even if the amounts aren't always the same, I think showing some strategic direction on that is really important too.
Thank you so much. I might turn to Ian and Damien for a last word or observation from both of you.
Thanks, Veronica. I might have the second last word, because I'm sure Ian always deserves the last word, but I completely agree. Interesting that we use the word partnership. Bob on the call, and certainly Sir Rod Eddington and others involved in trying to promote PPPs, public-private partnerships, focus very much on P being the critical element of that, the partnership. And I think that the missions that were run through the support of the AJBCC, the JEBCC, the TCCI, Austrade, JETRO, and many others, reaching back to, I guess it must have been 2008, 9, 10, were ultimately very successful. If we look back on that now, it's taken some time, as we always assumed it would, but that brought public and private sector together to focus on new areas of investment. And I'm sure that the same will be true, as Liz says, when the markets reopen, when the borders reopen, opportunity to bring people together in those settings with a really deep sort of focus on what are the critical issues from both the public and private sector to promote that sort of investment will be a real fillip for promoting that into Japan going forward. And just to reflect on one of the earlier discussions we had, I also wanted to call out the work that AsiaLink is doing in terms of making Australia more sort of, I guess, Asian capable. The ability to bring their own sort of future leaders program to bear and to encourage people to think deeply about the relationship, not just with Japan, with other parts of Asia, I think is really starting to beef up that capability, that capacity and understanding of Japan, and people are really re-engaging. So I have really high hopes for the asymmetry to make that much more symmetrical moving forward. Thank you.
Thanks, Damien. And to you, Ian.
Yeah, just sort of, I guess, bring it to the end. There's kind of, it's never been a better time to be involved in Australia-Japan relationships. It's the sector diversity, which we haven't had a chance to talk about probably in enough detail today. It's a sort of, when we sort of start out and think, I really want to get to 10. I don't know why. I always want to have 10 treaties in the report. And by the end, we identified 15, but actually, by the time you get to decarbonisation but what's driving a lot of this is corporate Japan want to be great corporate citizens. At the same time, they want to make money and they want to decarbonise. And you've got external pressures, activists on the register, activists who are not shareholders, as well as independent directors who are bringing a new kind of societal lens. So it's kind of an inflection point in the way in which Australia has been minerals and energy. And if we're going to continue to have this strong relationship, which is important at this sort of diplomatic and political, we have to find new ways of managing this transition together. So there'll be the traditional energy, the new energy, but also then the sophistication of the Australian economy, taking advantage of funds flowing out of Japan. And so to see the SoftBank venture fund, to see pension funds investing in Australia. I don't think we quite understand where that money's coming from, and being able to showcase Australia as I think someone made a terrible joke the other day in terms of our sophistication. We're number 88 in the world because we're basically doing civil works projects, scraping bulk commodities out and exporting them. So there's a lot of work to do, and it starts with the federal government. There may be a change in government, so there may be a reset. But also we need to find champions at that federal government and state government. And there hasn't been an identified Japan champion, I think, in the federal cabinet for some time. And, sort of driving and the collaboration across cabinet portfolios that is needed.
Thanks so much, Ian, and thanks for throwing out that pre-election challenge as well. It's been great to hear from you and Damien. Thank you to you and your team for producing such a high quality report. And thank you very much to our expert commentators, Nobutani-san and Elizabeth Cox in Tokyo. Thank you to those who are online for the good questions. If you haven't yet had a chance to read the report, it's available for download from the AJBCC website and also from the Herbert Smith Freehills website. Please have a look at it. It's really worthwhile reading. We look forward to seeing you again at the next AJBCC webinar, but for today, we'll close the discussion here. Thank you to all of our panelists.